Good afternoon and welcome to the Daily Stock Market Update. The DCX remained in the green zone for the third consecutive day and gained 55.95 points or 0.85%, settling at 6,662 points. Market turnover was BDT 7.54 billion, which is an increase of 24.44% compared to the previous trading day. Grameenphone and Robi from the telecom sector, ICB, IPDC Lanka Bangla and IDLC Finance from the NBFI sector and Beximco, Walton, Verger Paints and Ifad Autos from the industrial sector pulled the market up today. All the sectors gained value today except the tannery sector. The NBFI sector registered the highest gain of 3.28%, while the textile sector posted the second highest gain of 1.9%. On the other hand, the tannery sector registered the loss of 1.08%. 4 textile companies and 4 general insurance companies were among the top 20 gainers today. BDCom Online, IPDC Finance and NRBC Bank registered the highest gain, while Premier Bank, Prime Bank and ICB Islamic Bank were the top losers. Premier Bank fell in value due to dividend adjustment as it resumed trading today after its record date. Investors may have exerted selling pressure on the ICB Islamic Bank's stocks as the company posted a decline in its net operating cash flow per share compared to the previous year, even though it registered marginal growth in its earnings. There was no disclosed price-sensitive information for the remaining stocks. The trading volume of ICB AMCL Sonali Bank Limited, First Mutual Fund, Trust Bank and Imam Button increased significantly today compared to the average trading volume of the last 3 months. Investors may have shown interest in ICB AMCL Sonali Bank Limited First Mutual Fund due to the declaration that a trustee committee meeting will be held on 24th April where its quarterly earnings will be disclosed. There was no publicly disclosed fundamental reason for the volume increased for the remaining stocks. Today's top 2 news. The central bank is concerned regarding the deteriorating current account deficit and is planning to discourage import of luxury goods by imposing special conditions. This is because import bills have skyrocketed to USD 58.77 billion during the period of July to February of the current fiscal year compared to USD 40 billion in the corresponding period of the previous year. Although Bangladesh Bank has already imposed a 25% margin on opening of letter of credits for non-essential goods, a 100% margin is now being considered to discourage the import of luxury or unnecessary products amid high global economic uncertainty due to the Russian-Ukraine war. Bangladesh Bank has instructed banks to track export shipments in order to counter money laundering. For this, banks will need to hire experienced third parties to track export vessels for real-time monitoring purposes. In addition, banks will be allowed to remit foreign currency at the time of hiring foreign fleet trackers. Previously, trade-based money laundering has caused Bangladesh to annually lose US dollar 8.27 billion on an average between 2009 and 2018. That's all for today. We will be back again next week with more updates on Dhaka Stock Exchange. Follow LR Global on Facebook, LinkedIn, Twitter and subscribe to our YouTube channel. Thank you.